Go.
All right. Good evening, everyone. My name is Daniel Salomon, and on behalf of the Jefferson Civic Leadership Academy, I'd like to welcome you to our first session of the Jefferson Educational Erie County Business Speaker Series. Our cohort has created 4 sessions for our fellow Erie County residents that will take place this upcoming month. And tonight we'll be featuring 3 professionals in the finance sector who will discuss ways to help small businesses survive these unprecedented times. Our 3 speakers tonight will include Nate Ross, Commercial Credit Analyst at Northwest Bank, Chris Groner, VP of Capital Finance and Lending for Erie County Redevelopment Authority, and Rebecca Styn, proprietor of Room 33 Speakeasy and Director of Special Initiatives for the Erie County Redevelopment Authority. First, I'm going to turn it over to fellow cohort member Nate Ross to go over tonight's discussion plan and begin our conversation on this topic. Nate, would you please?
Welcome everyone to tonight's event. As Dan mentioned, I'm Nate Ross. I've been with Northwest Bank for 6 years in a variety of roles, including retail branch management, small business lending, and currently now a commercial credit analyst. I'm thrilled to be part of this year's Leadership Academy and truly feel honored to be speaking in part of this series. I have a passion for small business and feel that these next 4 weeks of series will provide a wealth of information for our local small business community in Erie County to assist in navigating the current environment this pandemic has created. We ask that questions be asked via the comments function, as we would like this to be as conversational as possible. Please do not hesitate to type any questions or requests for clarification. We have levels of expertise in conventional financing, SBA financing, county redevelopment financing, Erie County grant opportunities past or present, Paycheck Protection Program, both with phases 1 and 2 on the forgiveness pieces, the 3rd wave of PPP, and the economic injury disaster loans. Any questions will be filtered to the appropriate speaker. Please be reminded that we are not accountants or attorneys, but can help facilitate answering questions surrounding these topics. Please refer to your accountants or attorneys for taxing or legal questions specific to your own business or situation. These sessions are being recorded for future viewing, and if at any point you would like to rewatch these sessions, please visit the Jefferson's website the day following the presentations. To get us started, there's a common misconception that conventional financing solely includes visiting a local bank for basic lending products to support acquisition, equipment purchases, or working capital. Many think that an ongoing history of financials, collateral, and cash are required, but there are many options available beyond the conventional loan products. While these loan options are definitely out there, especially in times of strength and economic growth and profitability, but times like this foster the question of how can this be accomplished by other means? One of the main sources of obtaining capital through lending proceeds include local redevelopment authorities and SBA lending options at a variety of financial institutions. There's a large misconception that the SBA process is long, grueling, and filled with required additional documentation and requiring government's involvement in specific loan packages. But the SBA simply serves as an intermediary for banks and borrowers to provide additional safety for higher risk lending situations, yet yields the same or more positive results for borrowers. For example, the SBA has multiple programs like the SBA Express program that provides the bank a 50% guarantee with little to no interaction between the borrower and the SBA themselves. Nearly 100% of the process is handled by your local financial institution, increasing the ability for the institution and the lender to foster a relationship between themselves and the local business at hand. One area the SBA uses to accomplish this is during collateral shortfalls or smaller down payments provided by the business. The bank will typically require collateral to cover 70 to 80% of your loan proceeds. For example, if you're requesting a $100,000 loan, you'd be required to have $125,000 to $143,000 in collateral coverage. Collateral sources would include direct-owned real estate, equipment, strong balance sheets with collectible accounts receivables, or cash. But the SBA's guarantee may allow the bank to obtain less collateral to assist in the approval of the lending package. In times of acquisition or large real estate purchases, the SBA also has programs that require as little as 10% down. In addition to collateral shortfalls, the SBA offers loan facilities that offer longer terms with fixed rates, for example, a 20 or 25-year term with a fixed rate on real estate, as opposed to a conventional 15-year term with variable rates. There are many creative ways the SBA facilitates financing success for small businesses. Outside of the SBA loan options, financial institutions are able to partner with local redevelopment authorities to accomplish similar goals to the SBA. These programs are identical to those created and offered by the SBA, which leads us into our next presenter, Chris Groner of the Erie County Redevelopment Authority, to discuss his role in facilitating financing between your business and your local lender. Chris?
Thank you, Nathan, and thank you for the invitation to join you this evening. And as mentioned, I'm Chris Groner, the Vice President of Capital Finance and Lending with the Erie County Redevelopment Authority. And my primary role with the authority is the management of our gap financing tools, which consist of quite a few different programs. We have multiple low-interest gap financing funds that are available. We also manage a Cdfi, a community development financial institution. I'll get into what that is in a little more detail. We also manage some infrastructure development funds, and then also facilitate the grant writing for larger scale economic development projects. So in total, currently I manage roughly $35 million in low interest gap financing funds. And as Nathan mentioned, it works in tandem with your bank. Typically, we are the secondary lender on a large scale project. A lot of times you'll have a project where, for various reasons, the bank is not able to fund the entire amount. And then that's when we can come in and take a look at it and see if we can finance and close that gap in anywhere from 20 to 30 to 40% of that project. So certainly a lot of detail to get into with each program. They're very specific in what they can do. But I look forward to furthering the discussion this evening in general terms, and then seeing how we can work with your bank and your finance institution to help get your project done. So at this point, I'll turn it back over to you, Nathan.
So I want to turn it over to Rebecca Styn to discuss a little bit of the Erie County grants, Erie County CARES Act grants that were handled during the pandemic, as well as any grant opportunities that are still currently present that businesses can approve or still apply for. So Rebecca?
Thanks, Nate. And thanks for having me tonight as well. As previously mentioned, I'm the Director of Special Initiatives at the Erie County Redevelopment Authority. And one of the initiatives I worked on with the ERDA was the Erie County CARES Grant Program. I was responsible for developing and managing the application process, but worked in partnership with members of a team at the County Executive's Office. Originally, the county was committing up to $5 million in funds to small businesses with 1 to 100 employees. However, they ended up providing nearly $6.8 million to 189 businesses. Although we could not support all of those that had applied, because there were about 225 applicants, we were able to provide funding to almost 85% of the applicants. And this was all something that came down the pipeline really rather quickly. So I know because of this type of initiative, there will be more as we continue to progress over the next year. The ERDA also continues to seek local, state, and federal funding to create opportunities that will continue to support our local business community. One of our most recent initiatives was the development of the Artisan Entrepreneurial Fund in the fall of 2020. The fund was supported in part by a major gift from the previous startup incubator and a match from the ERDA. Through this initiative, Erie County artists and creative entrepreneurs are able to apply for up to $5,000 in funds with a max total of $25,000 per round. The first round winners were chosen in November by a committee of representatives from the previous startup incubator, as well as a member from the ERDA. 5 recipients received the maximum award amount of $5,000. The second round of the fund is actually currently open. It started January 1st and it closes on January 30th. Anyone interested in learning more about it can go directly to our website. It's open to any commercial artist or artist wanting to progress their business. The guidelines, application criteria can be found on the website, and applicants will email their information directly to me, which is also on the website. I'm happy to kind of answer any questions relative to this particular fund. And this contest is biannual, so there will always be one in January and one in September, or not a contest, but the application process. And I know that we'll continue to look for funding opportunities as we continue to grow. So with that, I'd like to turn it back over to Dan.
Thank you, Rebecca. And thank you all three of you for being here tonight, sharing your expertise and your wisdom for us. I know that Erie County is going to learn a lot from tonight's session and all that we have to offer. Let's start off with the hot topic of interest, especially with the news that recently came in. Nate, specifically for you, what should we expect for the next round of PPP funds? We've kind of got some news recently, so could you talk a little bit about that?
So yes, there were, with the recent passage of the stimulus package, there's a new round of $284 billion available in the Paycheck Protection Program. This program is going to look a little bit differently than what we saw in phases 1 and 2, as that there's going to be a revenue test going to be run to see if applicants are able to obtain funding through the SBA. So the revenue test requires that the business has a 25% reduction in revenue between the same quarter of 2019 and 2020. You do need to test the same quarter. So if you were to use quarter 2 in 2019, you would have to test it against quarter 2 of 2020 to see if that 25% reduction did occur. One change that did occur that is going to help our service industry, especially our restaurants, was the loan. The loan calculation will be 3.5 times for restaurants versus 2.5 times with our regular standard businesses. So that is a new change for the guidance of the SBA. So that's just a high level of PPP of what's coming up. I can go into way more detail as the session goes forward, but yes, I would answer any questions surrounding PPP. I'll pass it back to you, Dan.
Great, thank you, Nate. For those of us who are viewers tonight, please be encouraged to submit questions to our chat. We'd love to make this more of a discussion-focused, especially viewer-focused session tonight. So please, while you're listening to us live on Facebook, feel free to use the comment section in order to give us some questions that we can ask our expert panel. Maybe a good question to use for you, Chris, is for those who might not necessarily have the background, would you be able to give a little bit of explanation behind what exactly CFDI means and what it can mean for our Erie County residents?
Sure. So one of the funds that we do manage is a Cdfi, Community Development Financial Institution. A Cdfi is different than the other more traditional economic development funds that we manage in the sense that it has a more community-oriented mission. And so this fund is the fund that really is geared more towards the small business, the micro enterprises, the startups, the minority-owned businesses. It's also geared more towards geographically determined areas. And so oftentimes I'll have a business contact me with a financing need that may not fit into those larger traditional economic development type of programs, but the Cdfi sometimes is a good fit for them because we're able to do the $30,000 micro loan, for example, out of a Cdfi, whereas you really have a difficult time doing those types of smaller loans in the more traditional programs just because the fees don't make sense when you start getting into the large economic development funds. So, the Cdfi really is where, it's a benefit to small business and those businesses that are having difficulty seeking those funds elsewhere.
All right. Thank you, Chris. I think that was helpful. Let's jump to a question for Rebecca, specific interest regarding some opportunities for grants. Rebecca, what are the requirements to apply for the Artisan Entrepreneurial Grant? I'm sure a lot will be interested in hearing about that.
Yeah, it's actually pretty minimal. They have to be individual artists that are living in Erie County. They have to be 18 years of age or older, and they need to devote a majority of their time to their practicing, performing, or teaching their discipline. The restrictions really is that we do not make funds or grant funds to students or to fund academic study, and we don't make grants to pay for past debts, fees, that type of thing.
Gotcha. Okay. Thank you, Rebecca. Let's go back to Nate for a certain question. How does an SBA loan process look, and is it difficult to do?
So the SBA loan process is actually very similar to just seeking out your local lender for conventional financing. The intermediary bank or the bank that you're applying through actually handles all the paperwork in between you and the SBA. So there's no direct correspondence with the SBA from the borrower other than some additional documentation. So generally speaking, if there's two types of lenders, there's SBA lenders and SBA preferred lenders. So if the bank that you participate with is an SBA preferred lender, their general underwriting standards will suffice for the SBA loan process. There are multiple different programs within the SBA that a borrower can apply for, and it's per specific situation. So in terms of the SBA, generally it is utilized for acquisition of existing businesses or for startups. The acquisition piece is important because it allows, like I stated earlier, it allows for longer terms than a conventional bank will not require. So it's pretty impactful when you can receive a 25-year fixed rate term on a conventional or an SBA loan. So that opportunity allows some sort of safety for the borrower to understand that that rate is going to be fixed for that period of time. But another area that the SBA comes in play is like I said, was collateral shortfall. So if a business is newer or in its growing stage, they may not have sufficient collateral to cover what they're requesting. So that's generally where the SBA will step in and allow to create some sort of safety for the bank as long as there's adequate cash flow and debt service coverage. So I can go into specific loan programs with the SBA if there's any questions regarding each program.
Thank you, Nate. We actually do have a live question from our audience right now, and this is actually a great question for all three of you to take and answer at. It's a general question, especially for our new essential business owners. Are there new grant opportunities that new essential business owners could seek out? I know we talked a little bit about the entrepreneurial grant, but are there any other general answers that you might want to contribute to just what general grant opportunities could look like for new essential business owners? Whoever would like to go first, please take the lead.
Go ahead, Chris.
Oh, sorry, we all jump at once, right? Yeah, I'll just go ahead and jump in. I would say, first and foremost, it really depends on where the business is located. For example, I manage some funds for the city's Department of Economic and Community Development as well, and we have a couple of micro grant programs at the city. So if it's a new business located in the city, there's a possibility for some modest grant support there. A lot of programs are determined by geographical location in some cases. So, it's hard to say with one blanket answer what somebody may qualify for. It's usually best to have a discussion one-on-one and see where they're located or where they're thinking of locating. And then sometimes that will dictate what they qualify for.
What I was going to discuss was the EIDL, the Economic Injury Disaster Loan proceeds. So this is not a specific grant, but within the EIDL, there is an advance amount that a business can obtain, $1,000 per employee up to $10,000. But embedded within that EIDL loan, the SBA this is the one direct lending program during this pandemic that you would have to seek financing through the SBA. But this program is favorable on a lending side because it has a 30-year fixed rate at 3.75 for private businesses, and for nonprofits they can receive an interest rate of 2.75. So this program is important because of the extended terms with it, as well as the new PPP guidance does allow the EIDL loans to be refinanced into PPP loan proceeds, which then can be forgiven within this phase 3. So it isn't a specific grant, but there is an advance amount that is available through the SBA website, and we can share that website with you later if needed. Rebecca, if I want to pass it over to you.
Sure, thanks. So, I mean, as an entrepreneur myself and a small business owner, I know it's really hard when getting into the business sphere and getting the appropriate funding opportunities. And there aren't typically a ton available because I do think that this is still somewhat nascent across the nation. And we are kind of ramping this up, I believe, with different organizations. But I think it's important, a couple things to note. I do think that we can expect that President Biden will include new funding in both low interest loans and grants during the early part of his term. And the SBA is also expected to focus on women and minority-owned businesses and helping them in new ways. I think it's essential, anybody who's getting into the business sector, to really get to know the partners and the collaborators in our community outside of the ECRDA and the banks. I mean, there's Ben Franklin Technology Partners, there's the SBDC, the City of Erie, the Erie Regional Chamber and Growth Partnership, and depending on where you're located, if you're downtown, the Erie Downtown Partnership. You know, we have such a large ecosystem, and I know it can be hard to navigate these things sometimes, but even just making an initial reach out to like myself or Chris or somebody in one of those spheres, they can kind of help connect you and with other people and other players in the community.
Wonderful. Thank you, Rebecca, and thank you to all three for answering that question. Thank you to the audience for asking your first live question. Let's go back to Nate for a more specific question. How does the process work when a business would like to use the County Redevelopment Fund for lending opportunities? And what would you say the time frame is between an application and approval? Let's start with you, Nate, and then let's go to Chris as well for that.
So like we discussed earlier, the Erie County Redevelopment Authority does require you to have a bank relationship established to facilitate the lending that they can do. So typically we would look at the project, and if the bank may see something that they're not particularly comfortable with, or if they do like the project but they don't want to take on the full risk exposure, we would refer over to Chris to see if this project is something that the county is looking to finance. And at that time, we would work through their loan process, as well as bridge finance their portion of the loan for a short time until they have full approval. So I could pass it to Chris to kind of explain how the process on your side and how your approvals work.
Sure. Thank you, Nathan. And really, that's correct, where the relationship typically starts with the bank. The bank will contact either the client or that individual's banker will reach out to me and say, here's the project. It's a real estate purchase, it's an expansion, it's a machinery and equipment loan, whatever it might be, a combination of things. It could be a small project of 50 to 100,000. It could be a $10 million project, and everything in between. And what they'll do is they'll reach out and say, we're able to do a certain amount of this project. We like the project. However, we're limited to, 80% of the as completed appraisal. The as completed appraisal's coming in at 80 cents on the dollar. So we've got a 30 or 40% gap here. How do we close that? And then I take a look at it, see if it's the appropriate type of project for us to be involved in. Of course, our resources, we don't have enough to do every project we see, so we have to make a determination of whether or not it's the right risk and reward for us to take on. But and then other times I'll get the initial outreach will come from the client themselves, and then at that point, I always recommend that we get their bank on the phone or on a Zoom meeting like this for the first meeting. And I just like to coordinate with the financing institution from the start, because it's not just between the applicant and the county RDA, it's between the three of us, and we all have to be on the same page moving forward. In terms of the process, the nuts and bolts of the process, we have a checklist much like the bank has. We've got to see past tax returns, financials. We need a narrative of the project, copies of appraisals and estimates and things like that. But a lot of times their bank already has that. So that's why we like to coordinate and not have someone have to duplicate their efforts. So it's always best to coordinate between both lenders early on in the process.
Thank you, Chris, and thank you, Nate, for that answer. We do have another live question, and Nate, we'll start off with you because you specifically spoke to SBA loans before. One of the live questions that we got from our audience was, does a previous SBA loan affect eligibility for a grant? What would you say to that, Nate?
So the SBA prior guidance before PPP was announced and the EIDL announced was in 2020 was that you were only able to have one SBA loan program at one time, and to refinance SBA into SBA had to meet certain eligibility requirements. So at that time, you were unable to obtain multiple SBA loans. So when the PPP funding and the EIDL funding was announced in early 2020, that obviously came in conflict because there were many SBA borrowers that may potentially not be able to apply for PPP or EIDL loans. So that guidance was lifted on those two programs specifically. So currently, you can hold a SBA loan as well as receive a PPP loan. I mean, there was a bit of confusion at the beginning back in March and April if the EIDL loan, if you had one, had to be refinanced into the PPP. But again, that was lifted. I do want to touch a little bit about that EIDL refinance in terms of that, where with the new guidance, the EIDL can be added into the PPP loan proceeds for this third wave. So that's important to talk to your tax advisors to see if that's something that you would like to do, because what will occur is if you roll that in, we'll just use a $100,000 example. If you apply for a $100,000 PPP loan and refinance $100,000 in EIDL loan into there, you'll receive $200,000 in proceeds from the SBA in this third wave. And then we'll fast forward to 3 to 4 months when the forgiveness piece begins. You would be able to get a portion of that or all of the EIDL forgiven if it still meets the 60-40 split of showing that you used your payroll appropriately. But the downfall to that is if you do not seek or if you do not receive full forgiveness through the underwriting process of your bank or the SBA, then that EIDL loan is going to convert from a 30-year fixed term at that 3.75% to a 5-year fixed term at 1%. So yes, the interest rate at 1% sounds great, but on a cash flow basis, it may not make sense for you to take that risk. So I would definitely reach out to any tax advisors that you might have to see if this is something that you would want to explore doing with your bank. And not all banks may be participating in that refinance aspect to it. So you do have to speak to your local lender to see if that's something that they are able to do. But I'll pass it over to Rebecca to see if there's any grant eligibility requirements in terms of the SBA on your side.
There are not, at least previously when we provided the CARES grant to the county, It did not, if you had a PPP or a different loan, it did not preclude you from applying for this particular grant. There were some priority given to people who did not receive the PPP or the AIDL or any other type of funding, but you were still eligible to get it if there was funding available for it.
Great. Thank you, Rebecca, and thank you, Nate. I think that's a helpful response, hopefully, to our audience who are watching. Chris, let's go back to you for another specific lending question. Are there specific lending programs offered through county just for startup businesses? And conversely, are there lending programs that could be targeted just for mature businesses?
So thank you. So we don't have a loan fund that is geared specifically towards startups, but our Cdfi, the nature of which, you know, the mission is geared more towards the small business and micro enterprise, really is the fund that I would most likely be able to utilize for a startup. You know, we also look for if there are some grants available as well. If it's a business in the city, there is some modest grant support available. So, you know, if it is a smaller startup, smaller loan request, we do have the tools for that through our Cdfi. And then conversely, on the flip side of that, for the larger, more traditional economic development projects, we have multiple resources, multiple funds, some loan funds that are geared strictly towards infrastructure development. A lot of times infrastructure can be very difficult to finance, utilities, gas lines, things like that. We've got resources for the larger scale brick and mortar development, site development. So it really depends on the project as to which fund we would seek. And then of course there are some loan funds at the state level that you know, go beyond what our capacity is here if we need additional resources. So it really runs the entire spectrum from a $20,000 micro loan all the way up to a $10 million project. And so it's always good to have a conversation early on with the individual and you know, see what their plans are and see how we can best serve them. And a lot of times it's a combination of things. It could be a low interest loan coupled with a grant, maybe coupled with a tax credit. There are some projects I'm involved in that it's purely technical assistance. It's helping a business with code enforcement questions or zoning issues or engineering questions if there's some construction involved. So no two projects are alike. I've got nearly 29 years of experience in finance and real estate, and every project so far has been a little different. So I always encouraged the applicant to have that conversation early on. Sometimes it's just utilizing the city's LERDA tax abatement and nothing else. So it's always good to have that discussion early to see how we can potentially help.
Awesome. Great information, Chris. Thank you. Let's stay to that topic when it comes to the loan process. For you, Nate, maybe we should talk about what are some of the major factors for a conventional loan process for startup businesses. What would be some things to consider?
So I'd say the main thing is having a strong business plan first. I would 100% suggest that you reach out to your local small business development center. Gannon offers an excellent SBDC that creates business plans at free to or little to no charge at all with projections. So we generally would advise that you would seek out an advisor on creating a business plan and allowing allowing somebody who does this for a living to create reasonable projections and so that the bank can understand the project deeper. Beyond having that business plan in hand, the bank at that point, if you do reach out to an SBA lender, would actually utilize that business plan for their initial cash flow projections and potential loan approval. So we would review that business plan with the borrower and our underwriters and see if it falls into the SBA standard operating procedures. And if it does, we would generally lead into an SBA program at that point, with the potential to refinance it out of the SBA if the borrower will wish, generally at year 3 to 5. SBA loan programs generally have a 3-year prepayment penalty that can be pretty substantial. So that allows the business to grow and to see if those projections are truly being met. And at that point, the ability to see conventional bank financing makes it a little bit easier. But I would also say the SBA looks at equity injection versus then cash or collateral. So equity injection is what you're willing to put into the business, and they, like I said, they would have 10% down, but that 10% needs to be some sort of cash into the business. But the SBA looks at it as a whole project basis versus a bank, where many of you have purchased homes. Remember that you would have your 5 or 10% down payment plus closing costs. The SBA looks at that a little bit differently, because on a conventional loan, we would look at the cash down plus closing. SBA looks at it as a whole package. So if you have a $100,000 startup request, and there's going to be $10,000 in fees that would be associated with it, and this includes attorney's fees, any type of municipality fees, we would look at that as a $110,000 project, which only would require about $11,000 cash into it. So that becomes very impactful, because you can wrap everything into one loan at that point. So.
Awesome. Thank you so much, Nate. Chris, would you like to add anything to that?
Yes, I'd like to just add to what Nate said. The economic development programs are geared the same way. It's based on equity, and if you have these soft costs that you're incurring as you go along in a project, that can be built into the total project. And you know, a lot of times cash that you've been spending along the way, whether it's for advisement or whatever it might be, or site development, there's a lot of different examples, that can all go towards the 10%. When you utilize our programs, the initial hurdle is a 10% hurdle, as opposed to the more traditional 20 to 25% down. So it's important to understand that it's not just the benefit of a slightly lower interest rate, but it's also being able to get the project off the ground with a little less up front. And we have that flexibility for that 10% to be equity that's already in the project, not necessarily hard cash that you're bringing to closing. So every project's a little bit different, but we do have that flexibility.
Wonderful. Thank you, Chris. Let's actually, just as a quick reminder to everyone, as we're approaching our halfway mark, please be encouraged to submit questions to the chat. We'd love to be able to answer some live questions for you as our audience. So please don't be shy to use that Facebook comment feature to ask our participants and panelists live questions for us to answer for you. With that said, let's actually transition again to the next kind of category for businesses. Let's start with you, Nate. What would you like to speak upon when it comes to maturing businesses, and how do they keep their value of their business in both the bank size as well as potential buyers when it comes to trying to keep afloat during these times?
So I would say that right now the pandemic has really shown what a balance sheet should look like, and how you can strengthen that balance sheet. You know, a lot of sole proprietors as well as LLC business owners generally would like to disperse majority of their profits at year end, and hold very little assets on that balance sheet. But one area that this pandemic has exposed is that as things tighten, banks are going to have to understand that cash flow is going to be a little bit lighter than a typical year. And one way that we can work around that is assets as well as a strong balance sheet. So having the ability to have a little nest egg that you save some of those profits to show that you're willing to keep equity within your business and that your business is sustainable by itself without passing through all the income to the owners or to any of the shareholders is a main key point for a maturing business. Beyond that, I believe that having a strong collateral position is also important. Having real estate owned is key. So if you're in a position where you might be contemplating moving out of a leased space and purchasing real estate, and if you have the ability to do so, that's something that obviously banks love, because we would have some sort of collateral to be able to lend against without using just equipment. So I would say a strong balance sheet, obviously cash on hand, and collateral can really mitigate any type of possible cash flow shortfalls that may occur in the upcoming years. One area that is still being discussed is how again, we'll go back to PPP, is how the PPP funding will hit your books. That's a question that accountants are still kind of pondering, and how banks are going to handle that. It obviously needs to be booked at some point on your financials as some sort of income, but generally speaking, banks and lending institutions may remove that from their cash flow calculations just because it's a one-time event. So I would not hang on to that PPP as your cash shortfall. It's absolutely a great cash injection during this time. But having that cash on hand will help with any type of emerging issues that will occur. Chris, I don't know if you have any additional thoughts on that.
I do, and I'll echo exactly what you said. When I have businesses approach me now, I'm looking at what the pre-COVID numbers were. I'm looking at what the retained earnings looked like, what they obviously drew from the business, and what their capacity could be to retain those earnings. We're also looking at obviously cash flow in the short term, but the strength of their balance sheet. A lot of what I think our role in economic development moving forward, we need to be willing to do a pivot and look at businesses a little differently than we have in the past. And some of that may include coming in areas where we hadn't been involved before, where we're talking about things like restructuring debt. The businesses that are strong enough to survive this downturn are going to have damage done to their balance sheets. They're going to have cash flow challenges. And so I think we have a role to play when necessary to be able to come in and try to help restructure debt that had been incurred during the pandemic. A lot of short-term expensive debt in some cases that is harming their cash flow and hampering their growth coming out of the pandemic. So one of the things I'd like to see us do in the economic development area is to make that pivot where, before we had never been involved in refinancing and restructuring debt, and I really didn't think it was appropriate for us to be there. But moving forward, as companies heal and recover, that's an area that we may have to look at, because I think the banks too, and I don't want to speak for Nate, but I think the banks are probably not able to do all of that themselves. And, but we'll be looking at a business that otherwise was healthy and successful and productive and, able to survive this. And so we should be able to take a look at that and say, is there a way to refi and restructure and stretch that debt out at a very low interest rate and help them recover? So I think there's going to be a lot of programs that maybe are tweaked or reinvented as we come out of this to help businesses recover.
Thank you, Chris. Let's actually continue a little bit of that conversation. Would you mind sharing with us, what would you say some of the primary sources of collateral that you would look for when approving a loan? And does using the collateral inhibit businesses from applying to credit at another financial institution?
I'm sorry, was that to me? I'm sorry.
Yes, if you don't mind.
So the types of collateral will be the same types of collateral we look for in our traditional projects. we have the flexibility to be the subordinate lender. And so, our measure is a little bit different. Our hurdle that we have to clear is a little bit different. We look at it as, is this a reasonable risk to be taking? The way that we're able to approve a project is different than how Nate can approve a project by design. So the types of collateral we'll be looking for, if it's a real estate project, we'll obviously have a security position in the real estate and development. However, it will most likely be a subordinate position to the primary lender. The primary lender may be in at 50 or 60%. We might be in at 20 or 30%. And so we have that smaller gap that we're filling, and we have a smaller security position, a subordinate security position. For machinery and equipment, typically we'll, if we don't have a blanket lien on all the business assets, we'll have a specific UCC filed on that equipment. And so a lot of times, one way we work around that is if Nate calls me and has a client that's doing an expansion to their building and they're also buying equipment, sometimes we'll say, okay, one of us takes the building, one of us takes the equipment, so that we're not in each other's way, so that, I can have a security position on that equipment that is not behind the bank, and the bank takes a mortgage position on the building. So there's multiple ways to go after this, but we've structured loans in the past where there's personal assets that are pledged out of necessity, just because there's not enough collateral there. Personal guarantees are almost always required when you're working with public funds. So every scenario is a little bit different, but we try to be as flexible and reasonable as possible and work with your bank and do what we need to do to get the deal done.
Great. Thank you, Chris. It really does sound like that relationship and partnership with the bank really can make the difference. Why don't we switch gears a little bit to ask about another specific topic relating to the Erie County's CARE Act. This is for you specifically, Rebecca. What were the types of grants available through the CARES Act that Erie County handled specifically for us?
So Erie County received about a little close to $25 million from a block grant that they applied for through the DCED through the CARES Act. We were one of 60 counties that received funding. There were a variety of different initiatives that funding went towards. Obviously, close to, originally it was like 5 million that was just going to go to small businesses. There was a little over 6 million. There was a grant application for nonprofits. I believe there was about $1 million for PPE. And then there were different things like for direct county response and broadband and things of the like. So most recently though, the county also, with the 3-week emergency shutdown that we had prior to the holiday, the county, with the support of council, also set aside $1 million for emergency business grants. And they were able to award about 200 grants, a little over 200 at $5,000 each. So the pandemic is really kind of exposing all these gaps that we're finding in a variety of different processes, but they're responding to this efficiently too. So even though these have come up like rather quickly, I believe that these will continue to show up throughout the course of 2021 as well.
Great, thank you, Rebecca. So we're approaching a close to 10-minute time, 10 minutes left to our presentation today. I think this might be one of the best questions to finish off with, all to which of you are able to provide an answer for. What is the timing for PPP applications for this upcoming wave? Let's start with you, Nate.
So the current PPP wave is not available for borrowers to reach out or to go to their local bank, or the local bank is actually not able to process this through the SBA yet. I had a recent conference call yesterday that the SBA, the anticipated date is going to be next Tuesday, the 19th. Again, this is not a confirmed date, but we're hoping that the SBA does open this up. And each individual bank has their own timing and processing of how how they can handle the applications. They may open their own portals, or you may be able to seek out your local lender prior to that to kind of prep. But I would say it would be a very good time to reach out to your lender or to your personal banker to see what is anticipated with the upcoming PPP. PPP applications can be received with the new guidance up until March 31st of 2021, and the loan amounts can't exceed. Let me see here. The loan amounts can't exceed $2 million on the second draw. And again, there's going to be two different styles of application, or there's not going to be two different styles of applications, but there's going to be two different applicants. People who did not, or businesses that did not receive a first wave PPP or a second draw PPP. So there's two different guidances. Again, I spoke about the revenue test. That revenue test is only going to be required for somebody requesting a second draw PPP. If you did not receive that funding at the beginning in waves 1 and 2, you would not be required to complete that revenue test. So again, this is only for second draw folks out there. But what I would say is to please get everything ready and speak with your lender, because this PPP program can be very impactful for your business. I know there was a lot of confusion the first two waves because it was thrown at bankers very, very quickly. But now that we've gone through almost a year of this, a lot of your lenders are very, very familiar with the process and understand what is required from the SBA, and to make sure that this goes smoothly this third wave.
Thank you, Nate. We actually do have one more live question that just came in from our audience, and maybe this is a helpful question to ask specifically just as a wrap-up and summary for some of the processes. Where are the best places to find information on additional loan opportunities that may become available this year? These might be questions targeted for both you, Chris and Nate, if you wouldn't mind answering.
So the best place I would just say is speak to your local bank or to the bank that you have your relationship with. There are loan programs out there that banks aren't facilitating, but with the current environment, generally it's going to be facilitated through your local bank. So I would say that would be your first step. But as Rebecca stated earlier, it's important to have a strong advisor group beyond just your bank. Having an accountant or an attorney on your side to be able to also research this it's very important to have a strong relationship with both your bank or your lawyer and attorney. So that's generally where you can find it for conventional. The SBA's website has been cleaned up quite a bit. I would say that it's very easy to navigate now. The EIDL loans that I was discussing earlier in the evening, they have a lot of eligibility questions on there to see if you're eligible for that. So I would just go to sba.gov, and that will explain what that EIDL program is all about. And that is something that you can apply for directly to the SBA. Chris, I'll pass over to you.
Thanks, Nate. And I'll echo what you said. Start with your banking relationship. You can always reach out directly to myself, those of us in the economic development system. It is good to have a relationship, beyond your banking relationship, but that's really your primary contact. But your accountant would likely be able to assist you. Reach out to the Small Business Development Center at Gannon. That's what these folks do. They're going to be able to tell you right away that for a business your size or a loan request of this size, you should talk with so-and-so. And so, don't be afraid to make phone calls. And get sometimes multiple responses are good. You'll get multiple different answers. Some will fit, some won't. But there's a lot of folks out there that are ready to help. And the only thing I would add is it's really never too early to ask. It's never too early to seek that advice. A lot of programs have deadlines. A lot of programs cannot be applied for retroactively, and then you find out about it after you started a project or started something you're working on. So even if it's something you're thinking about 6 months from now or a year from now, call, talk to me, talk to your banker, have that conversation. We might be able to help you take steps today that will make it easier for you 6 months from now when you're ready to actually do a loan application. So have that conversation sooner rather than later.
Wonderful. Thank you, Chris. And I do want to give Rebecca actually a chance to add to this, especially as a business owner yourself. Rebecca, could you add to this?
Yeah, the one thing I just wanted to note is, really go after your targeted industry association, right? There's a lot of local chapters. One of the things that have been essential to me during this process is being part of our Pennsylvania Restaurant and Lodging Association, right? And they communicate with us on a daily basis. They let us know what's going on. And then that informs us to go to our local bank or to go to our authority and talk to the people that we're closer with. So it gives you an idea of what's actually available that's targeted to your specific industry.
Awesome. Great. Thank you so much, Rebecca. That might be the last question that we would have been able to entertain tonight. And I think those were all great wrap-up messages from everyone. I'd like to personally thank each one of you for attending tonight. It was truly great to have your experience and your expertise offered to our Erie County citizens, and hopefully a lot have taken away something from this message that we've shared and are able to really utilize this information to survive this pandemic and the circumstances that we face. So thank you all three of you for tonight's expertise and information. We really appreciate your time. I'm actually going to share some information for you to attend our next session, which is going to be next Tuesday, same time. The information for our speakers will be up here as well. And I'd like to just thank you as our audience for attending tonight. We really appreciate your participation, and we hope to see you next time. Thank you so much.